we've seen a lot of equipment manufacturing jobs get cut. That's been, I'm going to say, probably one of the top stories in the last 6 months. When we see what's going on with farm income, we see what's going on with commodity prices. When you look at these types of cuts, do you think this is a more cyclical move, or is this reactionary to just what's going on in the overall ag economy?
Well, so I do think we're headed into a tougher economic period than we've seen for a while. I think you have to go back to 2018, 2019 to find another time where I think things were starting to get really tight. I think input costs continue to be fairly high for producers of almost all our commodities. Labor stays high. Although we, from a livestock perspective, can talk about much lower feed costs, all the other costs, vet medicine, you name it, all those costs have stayed high. Hard to push, I think, hard to get those to move lower. So now we're going to perhaps be in a period of, this is all about who can produce the most efficiently at the lowest cost. That's a hard one as well, because you have to worry about, am I giving up yield potential to get costs lower? And what are those trade-offs? I think one has to think through where you can cut and feel okay. Yes, machinery's certainly been at the top of that list of things where folks have been willing to hold on to machinery that in the past, recent past at least, they've been willing to trade up pretty regularly. So I think, we're going to have, on the machinery side, I think we're still in for a tough period of time. It'll eventually turn around. It'll take time. For me, the bigger issue is, looks like we're going to have fairly good crops this year, fairly big crops. We'll see what USDA gives us in the WASDE report coming out here mid-August, but we could continue to put some pressure on crop producers that they haven't seen for a while. And so it's just a different perspective. And for those producers that have been aggressive the past 3 or 4 years, it's paid really well for them, I believe. But now may be the time where buckling down a little bit may be prudent if we continue to see net farm income moving lower. So we get a new net farm income estimate from USDA here in August as well. 116 billion was what USDA said back in February. If I think about just where commodity prices have gone since that February estimate, I'm not going to be completely surprised for USDA to have lower farm income come mid-August as well.